right away. Okay, guys, ladies and gentlemen, thank you for tuning in our training for today. We are going to look at a very sensitive indicator I personally love to use in my charts. When I open my charts, this is how they are. Let's open my charts. Let me go into this one. This is my chart. This is my chart. Okay, when you have a look at my chart, this is what you see. As I have a simple chart, it's like I'm missing one thing. There's one thing to be added here to make a complete chart. This is how my chart looks. If I just add one more thing, I sure either this or that's not yet. We're going to how my charts look. I kindly request that whoever joins us, they mute their microphone such that we don't disrupt the class. Don't disrupt the class. Okay, so my charts, every time I'm trading like this cover USDT, this is how my charts are always. I put there the Bollinger Bands. I put there the pivots. The other time I was telling about the pivots. And not only that, I also put there the Bollinger Band and Fibonacci. So Fibonacci, I'm sure you must have learned about the Fibonacci. Okay, then the pivot points, support and resistance, you must have learned about them. I'm the one who did this training. Then today we are going to have a look at the Bollinger Band to make a complete combination of what I personally use to make money from this market. But you can, there are very many others. We're going to have no other traders. They'll be telling us their indicators and how they combine the indicators to harvest money in this market. You get it? But let me first clean the chart. I remove the pivots such that you can see very well what I personally use. Okay. Now there is this indicator. The one you see is called the Bollinger Band. Bollinger Band are those three lines. I think the lower line, the middle line, and in my chart, you see that green, no, the red. Yes, there is a red button. Is it red or orange? Yeah, here it's orange. On my chart, according to what you're seeing, there is an orange line, but it's not necessarily line, but it's more of a curve. It keeps on curving, going up, going down. You get it, keeps on changing direction. Then alongside that curve, there are three other curves that are moving along with it, one on the bottom. So that kind of setting is what we call the Bollinger Bands. It's what we call the Bollinger Bands. Now, what does that mean? Okay, when you get this band on your phone, it might show different colors. But what I want you to appreciate is that this band is a powerful band that can help you make money if you learn how to use it correctly. You get it? If you learn how to use it correctly, it can make you money if combined with other indicators. So here is the game, guys. The orange line is a moving average. It's a moving what? Average. Now, what's a moving average? A moving average is that line. You get it? that moving average is that line that shows you the average price, okay, of a certain of a certain number of candles. Let's say we are looking at a moving average of 20. Okay, let's say 20. So that line is plotted looking at 20 candles. So they get the average of 20 candles. Let's say it's a 1 hour candle. They got average of 20 candles, then another average of 20 candles. So they keep plotting. But that's not what you really have to memorize. All you have to know is how do I use the moving average. So prices keep on coming to the moving average and going back. The prices will always test the moving average. If we have gone up, you get it? The price will always come back to the moving average and see how it is working. I'm giving you an example. Like you see, at this point, you see this point, we went up, but let alone we came back and retested the moving average. So sometimes we may go through it and we go down, or it might hold us and we go back up. But in most cases, even when we are going down, we go down, then we come back and test the moving average. So in most cases, we shall always come back to test the moving average. Yes, we are going down, but when we go down, we come back and test the moving average. So we either fail, okay, we either fail and go, we continue going down, or we don't want, or we might pass through and then we continue going up. So the moving average is a very important, line for a trader. You get it? So if we failed, we tested it, we failed, then we came back. But again, we tested it, we failed, we came back down. We tested it, this time we went through it. You get it? And then, so we shall always go down and then go up. Every time we are above the moving average, we always come and retest it. If we go down through it, then we can always come back and retest. So that line, the moving average, is important. That's where prices want to be. You get it? They want to be at the moving average. But it depends on who is more powerful. If the buyers are more powerful than the sellers, then we shall go to the moving average and go up. But we shall always come back and retest. If they are still strong, we go up like that. So you looking at the moving average and how prices deviate around the moving average will always pay you a good sum of money for your trades. Now, what are the other blue lines that you're showing us? This, what are those other, like this one? Then this one. Now, like I told you that prices love just being around the moving average, but most times the buyers become much stronger than the sellers, or the sellers become much stronger than the buyers. Hence, it makes us go below the moving average and we trade below the moving average. But like I told you, most times it shall always be coming back to the moving average. So these blue lines, this one shows us a 2% standard deviation away from the moving average. Then this one, the lower line, shows us a 2%, a 2 standard deviation. It's not the percentage, but it's a 2 standard deviation from the moving average. So what comes to your mind? Just know, get this from me, that every time I see the prices, the market trading below the lower band, it means that that market has been stretched, okay? it's like it has been oversold. It's like the buyers are more like the sellers are more likely going to be exhausted. Because at the end of the day, 95% of the market have to be held in this band. Like I told you, prices have to be in the middle band here on the moving average. But most sometimes we are pushed up beyond the moving or up the above. So when we come and we trade above, like you see, we are trading above the upper band. There are more chances of us coming down because at this point we are having a 2 standard deviation away from the middle band. So away from where we love to be. So if we are trading above the upper band, we are more likely going to come back. That's why you see that we are trading above the upper band, but let alone we had a very big price drop coming back to retest the middle band. What is good, when we retested the middle band, very many buyers were still there and pushed us up again. But you see, pushed us up again. But most times we shall always come back and retest the lower band or the middle band. So if you have this kind of information and you are trading, you're trading,
Hi friends, I think a doctor has gotten a network challenge, but soon he's connecting back. Soon he's connecting back. Let's just be patient. He's coming back.
Okay, thank you so much, Rita Harriet. I'm sorry, my network got disrupted. Hope you can now hear me. Yes, kindly, the host, Mr. Kainda Usama, please make me a host again so that I can continue sharing the screen. Okay, thank you so much. Mr. Usama, kindly make me a host and then we proceed. Okay. Okay. Thank you so much. So, ladies and gentlemen, I'm sorry for that. My internet got issues, but hope you can now still see my screen. Good. So, as a trader who is looking to buy at the price, at the point when the prices are low, okay, you would just wait until you need the market become more, as in, you should just wait until you realize that the sellers, okay, are more exhausted. So the buyers are now coming to take up, okay, and then they push the market high. When do you know that these guys are exhausted? Just wait for the prices to come back at the lower band. So if the market come back at the lower band, it will give you a very good opportunity. So I think now you don't just wait for the market to come at the lower band and then you just buy. Because most times it comes at the lower band and it will be trading below the lower band like that. So you wait and see, okay, price action. Wait for price action. The other time I was explaining to you price action, and I showed you that you can look at an engulfing. Okay, engulfing, it means that the buyers are now have taken up. Or you can see a doji. It means that a doji also means that these guys have been exhausted, so we are taking them up. You get it? So at the end of the day, you can make wonderful trades. Okay, let me give you an example. I think like this. Okay, at this point, like this. Well, I don't join the move when we are in a squeeze. I think this is called a squeeze. Okay, this is called a squeeze. This one is called a squeeze. It means that there is no money in the market. The buyers or the sellers are just resting. But at some point, the market might either break up or it breaks below. So just wait until you say break and then get a confirmation. So I think we were squeezed, then later on we broke below the lower band. You get it? But we were pushed up. Then you wait for the price action. I think a dodge like this, coming back in the band. This shows you can, even if you're not very confident, wait. This other one can also confirm for you. Then at that point, when you see that we have entered back into the band, for me, I love entering from where I've entered. Then I take profit before the middle band or on the middle band. I think like this. This was a very wonderful trade that would give me something like 2.6. Now, why don't I hold into the market to go to the upper band? Because I don't know what's going to happen. Because like I told you, the markets love being on the middle band. So when we reach on the middle band, that moving average, we might be pushed back down, or we might be strong and we go through it. So I don't know what's going to happen. But what I'm sure is that when we get a confirmation that we have got strength on the lower band, it means we shall go until we hit the upper band. If you do that, if you follow this correctly, you will not be floating for long. You get it? All your trades will be selling in time. You can never stay in the trades so long because you're always buying at the right time and you're selling at the right point. You get it? Let us try to identify other possible trades. Something here, then you see. This is what I was telling you. Yes, we've been riding on the lower band. I think we've been riding on the lower band like that. It came in riding on the lower band like that. Then later on, we got a confirmation. I think this shows that the buyers have taken over. This is a good price action. So someone would just enter here, just enter at the close of that candle like this, then targeting the middle band. Targeting the middle band. Let me see what happened. Did it sell? Yes, it sold. I think in that way, so you would target like something like a 2%. In that way, you will never go wrong. You get it? Or you not even wait that much, as long as it touches the middle band. It was a trade that would give you around 1.3 in a few hours. But let alone, of course, it delivered up to 2. But my target is just the middle what? The middle band. So you would still wait. Where could someone also have a good trade? I think here, at that point, you would get a good trade. So we went at the lower band, I think. That's what I'm talking about. Went at the lower band, riding a lower band, then we got this confirmation. It is called what? The engulfing, showing that now the buyers are strong. So you would open a trade targeting the middle band. So this kind of trade would give you a 1.3. However, someone who targeted the upper band to give them a what? 5%. But my philosophy, I personally, I don't want to stay in trades for long. I believe that if I can take a trade, okay, and then I take a 2%, let's say in 2 hours or 1 hour I've sold, then I identify another trade of 2%, okay, in another 1 hour I've sold. At the end of the day, maybe I would have got a 4% out of the market, and then I chill. I chill. You get it? I believe in small wins consistently. You get it? That's my philosophy. So you would do. Where would we have other good trades? Let me just show you. Okay, I think here. This was a good one, a good price action. This was a good price action. You came below the lower band, and then this shows what? This shows that we are going up. So just open a trade around here, and then you target the middle band. I see. So that one would give you a 4%. 4% now, how many hours? 1, 2, 3. Yes, 1, 2, 3, 4. In 4 hours, sure. You have not floated for long. So what make us float for so long is that we open trades at the point when the market is up. When you see that the coin has pumped up, that's when you want to enter. No, things don't work like that. Just wait for the markets to come back to the lower band. Then that's when you can take good trades. But make sure you move out of the market. Let's say we've been going down, then we identify green candles. It means we're more likely to go up. Enter, target the middle band. So at this point, if we targeted the middle band, we'll get like 1.6. Then wait for another trade. Or look at other coins. Where are they? They're getting me. Yeah, so that's how I use the Bollinger Band to identify trades. Let me see. Let me look at another coin. Let's say I want to look at the other coin. Let's say I want to look at Pepe. Pepe USDT on Binance. See that? Pepe. Are you trading Pepe? No, we're not trading Pepe. We are trading coin called let's we are looking at cover. Which coin can we look at, guys? SRP USDT on Binance. Is it SRP SXP USDT Binance crypto? Want at this, okay. Let me see SXP. I want to have a look at SXP. SXP, like that. Okay, I'm looking at the 1 hour chart. Are you getting me? So, where would we get some good trades? Good trades will be here. I think there was an opportunity here. Just wait until we come back to the lower band, and then we get a candle, green candle showing that we're going up. I would enter on this candle, I think this candle, and then would targeting that. Could even target the upper band. However, you realize that someone would comfortably move away with that 1.3. However, there are other things that I also look at. Other things I look at are the other indicators when it comes to taking profit. I look at the next pivot. If the bands are telling me, man, at this point we have been, the buyers, the sellers been exhausted, and now we are more likely going to go up. I open a trade in that candle which shows that we are going up, and I either target the middle band or I target the next resistance. Remember the other training I made? So you'd open a trade here. The bands have told you that, man, these guys are exhausted. So you'd open a trade targeting the upper, the next resistance. But to make sure you go out before you hit it. I think just before we hit that resistance, we came out. So you would really comfortably take a 4%. And that would sort in 1, 2, 3 hours. You get it? However, it let alone came up and then even tried to go through the resistance. So people would be patient, would take 6%, but why would you wait for 6%? Take it or profit, go out of the market. Then all you have to do is to wait again until it comes back to the lower band. I think at this point, it came back to the lower band, showed there was a candle showing that, man, these guys are exhausted, the buyers have taken over. So you enter on that candle that shows that the buyers have taken over, targeting the middle band or even targeting the upper band. But most times, if you want to sell faster, please target the middle band. So we would comfortably take a 1.5 out of the market. That's good. You get it? But you can even see it let alone moved up, trying to hit the upper band, though it will take a little longer, trying to hit that. So if someone maybe targeted a 3 or a 4%, still they would sell. Okay, 4% they would sell. Okay, so ladies and gentlemen, that's how I use the Bollinger Bands and then the pivot. Make sure when you enter, you target either the middle band if you're realizing that there is small profit, so you can target before the next resistance. Where could we get other trades? Wonderful. Where could we get other trades? Like at this point, we've gone just below the upper band, the lower band, and then we've got this confirmation candle that these guys are exhausted. You'd join in and target the next pivot. although it had small money. You get it? If you see that the trade has small money, just ignore it, leave it. Okay, so which opportunities are here as of now if I want to trade SXP? At this point, I don't want to enter the market because we are on the middle band. You get it? I don't want to enter the market at that point. I just want to wait. I will wait until this market or the prices come back to test this. I think to test the lower band and also test this. So if trading is about being patient, you just have to be patient until the right setup shows up. So I will wait until this market come either on the lower band or on okay. I want you to test this line and also this very line. That's when I want to enter. Then if I see any confirmation, let's say a doji, or let's say an engulfing bar, I'll make a trade targeting the middle band. So I'll just wait until I see the confirmation, then I take my 1.2. So it might sell in maybe one hour or 2 hours, and then I enter another trade. You get it? Just like that, you'll be in position to make money, and make money. Let's see if I have any other example before I take questions. Now, how do I use like I told you, I use 3 indicators. I use Bollinger Bands, pivots, and then what is this? The Fibonacci. So when I make a trade, I make sure I look at the Fibonacci lines and I put my take profit before reaching those Fibonacci lines. You get it? So Fibonacci lines also work as support and resistance. That's what they really mean. But to get very wonderful trades, please always wait for the market to come below the lower band, and then you get confirmation. That's when you can enter and target either the pivot points or the middle band or the next Fibonacci line. You get it? Yeah, so let me know if you still have questions about that. Let me know if you still have questions about that. But if you have questions for me, guys, I'm here. Good leader, I'm Prince. Okay. If you have questions about that, but I'm done with that training, guys.